No excuses. Get her done. Booyakasha.
All right, buddy. Good morning. Today is Thursday. What day is it? Is it the 17th or I think it's the 18th
It'd be
of
the
May?
18th of May. Yes.
It is a good morning indeed. Let me refresh these cryptocurrency prices. I think Bitcoin's moved up a little bit in the past 24 hours, which is
Refresh.
always nice to see.
Yeah, I think it's very interesting to see how, even though it's somewhat painful to watch in the short term, meaning it's kind of like watching paint dry or grass growing, the the fundamentals, the underlying reason, the why Bitcoin exists and why you should probably have some. Again, not financial advice. Do what you like, but for me in my house, we're gonna hodl Bitcoin because we need to feel some level of security, some level of safety, given the wild happenings in the world and the teetering on the brink. Here we are again, as Satoshi took from the article in 2009 that he inscribed, or they, whoever they are, whoever they is, Satoshi Nakamoto, who happens to be inscribed into the Genesis block on the Bitcoin blockchain at the very beginning
Yeah, I
of
think
this
we
glorious
as we
thing.
as we look into the future here, and we have to follow all this, manufactured crisis over the debt ceiling. We'll see how they handle it. What I'm hopeful for is that they mishandle it and the market pulls back for no reason other than people are worried and scared, and that will give us an opportunity to buy Bitcoin at a lower price. I would love to pick up some Bitcoin at $24,000. That would be great. And so, once you've built a position in this over time, what kind of happens is you become irrelevant to the price action in a sense that if you're not worried about your day-to-day living expenses and you're just learning about Bitcoin and trying to build exposure to it, what ends up happening is you almost end up rooting for the price to go down, right? Because if, say, you've got your position started to be built up, if the price goes up, great, you're happy. But if the price goes down, you have a chance to acquire Bitcoin at a cheaper USD price. And that's a mindset shift that will happen over time as you get more involved in this. But after being in this for 6 years, I kind of look at this as, I think I have an idea of where this is going. I have strong conviction in this asset. So if the market wants to be irrational, that's fine by me. I'll just buy Bitcoin at a lower price. And so that's something you kind of have to think about as you get more involved in this. Is it's not a bad thing if price goes down in the short term.
That's right. And another way to frame this is that we look at the Bitcoin chart, for example, and like on a daily time frame, we look and say, "Oh my gosh, it was at 31,000, and then and then the world ended, and it came all the way back to 27,000. Oh my God!" But what would be interesting to see is not well. There's two ways to look at this. If Bitcoin did pull back to 24, for example, or let's call it 23, just to really like ruffle some feathers here, it would be roughly halfway between where it was in January and where it was in April. It would be it'd be 50% off. Okay. Now let's frame it a different way. You go to this happens in my mind. I don't think about this beforehand. It just happens. I go to the grocery store and my dearly beloved says, "Hey, would you pick up some of them fancy soda waters that we like to drink?" And I'm like, "Sure, I'll do that." I go to the store and I'm walking down the aisle and I'm looking at the same stuff that I bought last week that was 2 for 1. It's 50% off. Okay. And I look at it and it's at full price. I walk right on by and I get home, and what happens? She says, "Well, where's the soda water?" And I said, "Well, it was last week, it was 2 for 1. It was 50% off. I'm not going to buy it at full price because I could get it at half price last week." And what I know is going to happen again in the future is that things will go on sale. And what in the supermarket example here, we will walk right by that thing, or I will walk right by. And I'm not the only one that does this. And because I'm not the sharpest knife in the drawer, and I was born at night, and maybe I was born last night, but there's a lot of things that don't make sense to me in the world, and I'm kind of dumb on a lot of things. But what I'm able to observe is that there are a lot of people that will wait until something goes on sale, and sometimes it has to come on sale by like 50% or more before they will happily buy whatever that thing is. We don't look at Bitcoin, or I say we, there are enough people in the world that don't look at Bitcoin the same way. And look, everybody's entitled to their perspective and they the way that they want to look at the world and all that great stuff. The point I'm trying to get to is that when you were describing moments ago this idea of Bitcoin's price pulling back or correcting to the downside some as an opportunity, that is still something that's a tough pill to swallow for a statistically significant number of market participants. But as you make your way through this journey and get further along this journey, you look at these as opportunities. And what the chart, like when I look at a daily chart, I look at there's been this impulse higher, got a lot of excitement, and then something changed. There was some sentiment shifted from excitement down to, okay, maybe I need to be concerned, and price corrected and pulled back a little bit. But the point I'm trying to get to is that if Bitcoin were to pull back all the way to 23,000, there would be two ways to frame it. And in summary, it's either, oh my gosh, Bitcoin is dead, it's only 23,000, or you say, oh my gosh, Bitcoin was 31,000 earlier this year, it's now 23. It's a 50% off sale. Now I'm going to take action. Now I'm going to acquire some because my thesis happens to be that in 4 years, 8 years, 10 years, this thing is going to have really cemented its place in the ecosystem globally. And we're still in the early phases of this adoption curve globally. And we understand the fundamentals have not changed. We've gotten our second round of major financial crisis, which is what birthed Bitcoin in the first place. We have U.S. dollar denominated, or the national debt in the U.S. is now not order, but a great deal higher than it was in 2009 when Bitcoin was birthed into the existence. And yet the fundamental case is even stronger today than it was back then. The network has endured and persisted through all kinds of calamity and horror and just terrible things, very bad actors. And TikTok, next block, it has persisted and it is winning. And yet when price pulls back like this, it's really difficult. And there's no judgment here because I've been through this mindset. I've had to do a lot of work to get over this mindset. But to your point, if Bitcoin pulled back to 20,000, there would be, in my mind, I'm allowed to speculate just like everyone else. I think even more interest in Bitcoin during this upward trend. Price corrects a little bit, people swoop in and buy it on sale, and then sit back or go back to their lives and try to make sense of the world. So that's
Yeah,
that's
yeah.
what I think about.
A couple of things. And so, how do you manage this? How do you manage your risk? Well, what you don't do is you don't take your full amount that you're going to allocate to Bitcoin and buy it after 100% run up. So you don't take everything and put 100% on Bitcoin when it's at 31,000 after it just ran up from 16. What you do is you form a plan and you dollar cost average your way in, so that way you have opportunities. So even if you do buy some at 30, you're still buying at 27, you're still buying at 25, you're still buying at 22. Okay, and so what that does is average out your price. And the other thing you do is you don't use leverage. You don't get on these exchanges and take 2, 3, 5, 10x leverage and hope you're going to make a quick trade and a quick thing. You just buy the spot Bitcoin price, you move it to your cold storage wallet, and you don't think about it. Okay, that's how you manage this volatility in Bitcoin. And then what we wanted to get to today, I think it's a good place to transition to, is we wanted to talk about what are stable coins and what is their place in the crypto markets and also becoming more so in traditional markets. And so one of the most famous ones here we've got is Tether. Okay, and Tether gets a lot of controversy, but as it's turned out, Tether's actually been one of the stable coins that's endured through all of this. And so, Tether tokens are assets that move across the blockchain just as easy as other digital currencies that are pegged to real world currencies on a one-to-one basis. Okay, all Tether tokens are pegged one-to-one with a matching fiat currency and are 100% backed by Tether's reserves. So what you'll see in crypto, and you'll hear people talk about this a lot, is people will move to stables. And what they mean is they're moving to stable coins. And instead of making a trade on Bitcoin or another crypto asset and going back to dollars and sending those dollars back to a bank, what they'll do is they'll trade Bitcoin or Ethereum or Solana, and they'll move it to stable coins, which are, like we just talked about, currencies that are pegged to real world currencies. Could be pegged to dollars, could be pegged to euro, whatever you want. But stablecoins have proven to be massively important in the crypto world over the past few years. And I think that they're going to continue to be, even if these governments don't like them. And I'll get into the reasoning behind that here in a second. But in general, all a stablecoin is just think about it like a dollar. It's the same as one token, one tether is equal to $1. Okay, and the reason that works is because in theory, these tether tokens are backed by actual dollars or investments that equal dollars in Tether's reserve asset pool. Okay, so there's a couple different kinds of stable coins. Another one is USDC. Okay, and here's USDC. It says upload your dollars. USDC is a digital dollar, also known as a stable coin, that's available 24/7 and moves at the internet speed. USDC lives natively on internet, running on many of the world's most advanced blockchains. Billions of USDC exchange hands every day, and every digital dollar of USDC can always be exchanged one-to-one for cash. Okay, and so the way that works is you go to your exchange, you have USDC or Tether, you exchange your USDC or Tether on the exchange for your local currency, and you send your currency back to the bank if you so choose. But if you hold stable coins, you can keep those dollars on the internet, essentially, right? And not have to deal with banking. So one of the issues is I want to buy XYZ crypto token. It's Sunday afternoon. I don't have any money in my exchange, sitting on the exchange. How do I do it? Well, you can exchange crypto for crypto, or what you can do is hold stable coins and use those stable coins to exchange for whatever crypto you want. I think that's a very broad overview. Ted, did you have anything to add?
One thing that I have recently started to think about more is, and it didn't occur to me initially, is that depending on who you're listening to, there's a lot of doom and gloom. Oh, the dollar, the dollar is dying, the dollar, de-dollarization, blah, 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 blah. I'll argue for a second that I have while I have a very limited understanding, you might say, about how stablecoins are backed, or maybe there's a lot that I still have to learn about stablecoins. But one thing I was thinking about recently is that the demand for dollars globally, like I think that the stablecoin presence creates an interesting dynamic, or it's another interesting variable, or I don't know how influential it is, but it's interesting to me to think about how people in other parts of the world who are not able to get paper dollars to transact because there's capital controls and other nasty government interference, people being frozen out of their bank accounts or not being able to go to the bank and get their local cash. They think about it this way: if you have the means to get crypto on your smartphone, or your relatively speaking smartphone, you can have access to dollars. And that's important to me, or I think that's important because people in other parts of the world would rather have dollars. And if they can't get paper dollars, but they can get USDC or Tether, USDT, like Tom, then I just it's something I'm trying to get my mind around, and maybe you have some like insight on this particular thing. But I think that the stablecoin market helps facilitate an even stronger demand for dollars than we even understand globally.
I think that's right, and I think what you got to remember here is this isn't a commentary on whether stable coins are good or bad. This is just what they are at the moment, and there's different kinds of stable coins that people have tried in the past. The most famous one was Luna, okay, and Luna issued a stable coin called UST, and some of this gets confusing because it's USD, USDT, UST, but Luna's stable coin was UST, and what Luna tried to do was create something called an algorithmic backed stablecoin, meaning that it wasn't backed by actual dollars. They used an algorithm to mess with the pairing on the peg to the dollar, and it failed miserably. I will argue that it didn't actually fail. It worked exactly as designed in the sense that as UST depegged from the dollar, more Luna was created, and this is how this stablecoin worked, an algorithm stablecoin. And so as it went to zero, there was billions and billions and billions of Luna, the underlying, the L1 created, which drove the price to zero. But if you look at how it was designed, that's exactly how it was designed to work. The thing that happened to them is the peg broke, okay? And there's a lot of that's very complicated. That's more advanced stuff. But what the main thing here is to understand is that the general idea of a stable coin, if you're going to use stable coins, you gotta do a little research and try to best understand as much as you can, are these stable coins actually backed by dollars? There's a lot of different versions of these in the crypto world. And to your point, I don't think the government is really a fan of these things other than what we'll get to here in a second. But in general, that's the idea of what a stable coin is. And two of the most popular ones are Tether and USDC. And so you'll hear a lot about, people, worried about these things. And I think it's a good worry to have, right? And you always have to be careful. For me personally, I choose to keep my money in Bitcoin. There's people that will try to play the moves in Bitcoin and go back and forth between stable coins and Bitcoin and try to acquire more. It's the same with the dollar, right? It's the same thing. These are just stable coins, but these things live on the internet. You can use them whenever you want. I personally have used them to make investments. So, there's companies that will take USDC to fund an investment. That's much easier than having to wire money from a bank. Okay. But the same principle applies to stable coins as it does to cryptocurrencies, in the sense that if you end up holding a lot of stable coins, you don't want to leave them on exchanges. You want to move them to your cold wallet or an intermediary wallet that's not the exchange, because you still have the same risk. And so the other thing I want to point out here is that these are different from central bank digital currencies as well. This is not the same thing as a CBDC. Now, could it morph into a version of that? Maybe, but I don't think that's happened quite yet. The idea here, though, is these are just dollars that live on the blockchain, okay? That's all they are. And I think that's the easiest way to describe it. Both Tether and USDC have so far weathered the storm. I don't personally like staying in stable coins very long, but I do use them. They do have utility in this world. And so let's move on and talk about real quick what's happening with Tether. Okay, so starting this month, Tether will regularly allocate up to 15% of its net realized operating profits towards purchasing Bitcoin. These Bitcoin shall be considered on top of the minimum reserve assets that 100% back the Tether tokens. So this is fascinating, okay?
Yes.
And I want to get to real quick. Let me pull this up. Well, I can just talk about it. So you might be asking, how does Tether make money? It's just a stable coin. All right. And so let me pull this up real quick.
Yeah,
It
I
may,
think the utility the utility of stable coins is awesome. Personally, I think I'm able to, if I want to move, $1,000 worth of value, and I can take $1,000 in my crypto dollar account, like on exchange X, and I can buy USDT, and then as easily as I can send other crypto over the network, I can move that to an exchange. I can move it to my cold wallet, and I can facilitate a trade. I can do all kinds of interesting things 24/7, 365. Anyway, go
and,
ahead.
and it speaks to the idea of being your own bank, and the utility of stablecoins allows you to do that in a more effective manner, as opposed to one of the issues. If you're using crypto to change crypto, you've got a tax issue here. If you're swapping Ethereum for, Solana, and you have a gain on that Ethereum, you have a tax obligation. So stablecoins allow you to, in my mind, it simplifies things. Instead of, swapping like that, you could end up in paying fees for swapping for all that. What I choose to do is any new buy that I'll do is I'll just use stable coins. But here's how Tether makes money. They make money through transaction fees. Okay. They charge a fee for each transaction that's made using its token. Now these are really small fees, but they add up over time. They make interest on reserve. So this is important here, and the point that I want to talk about next. They also make investments. One of those is Bitcoin. They also buy precious metals, and they also loan some of its reserves to other institutions, and they can generate interest income. So here's something that I want to talk about real quick. Zoom's got to get out of my way. All right. Okay, so last quarter, Tether made 1.5 billion in net income. That's 493 million per month. They plan on investing 15% of net operating profits in Bitcoin. That equals 74 million of Bitcoin, or 2,780 Bitcoin every month. That's 3 times the amount of minted per month. Now check me on this, because I didn't do the math here, and sometimes so this is Bitcoin news, and another thing to remember is some of these like Bitcoin news, documenting Bitcoin, all these things, they're generally good with the numbers, but you got to remember they're biased too. So sometimes it's a little bit, you just have to check it. But that's beside the point. What's interesting here is that Tether has chosen to take some of the profits that they've made through the ways we just talked about and invest directly into Bitcoin. That to me is fascinating, because what that does is it generates a constant demand for Bitcoin. And here's what's going on. Tether is making investments, and one of their investments is, let's just say, US Treasuries. Okay? So as interest rates have gone up, Tether's profits have gone up. And they're using those profits to buy Bitcoin. Some of those profits to buy Bitcoin. But other profits, and this is where it gets really interesting, are used to buy US Treasuries. So we live in a world right now where you have multiple countries deciding they want to maybe back away from the dollar. And what that means is countries that used to buy US Treasuries in bulk might not be anymore. So where is the demand from US Treasuries coming from? Potentially coming from? My God, it's coming from a crypto company. So we go full circle here into where you could say the United States government is anti-crypto, but what's happening here is you have Tether purchasing US Treasuries when nobody else is. So you've got to really think hard about this for a second and realize how draconian are they really going to be on crypto if crypto ends up being a demand driver for US Treasuries. I think that's fascinating.
It is. So the Politically, you have to be, if you're on the left, you have to be anti crypto and anti Bitcoin, especially. And if you're in the SEC, you have to be seen to drag your feet to create regulatory frameworks and clarity so that crypto businesses can operate legally and within compliant in a compliant stance nature in the US, so that the traditional finance system, by way of their lobby, can continue to put money into politics to slow this down. So the government won't regulate, they'll talk down crypto. It's not safe. You're a drug dealing money launderer if you use it, according to Elizabeth Warren and Brad Sherman, and a tax evader, by the way. So what I'm trying to communicate here is this is the ultimate in like irony and hypocrisy and bureaucracy and horsepucky. The government will talk this thing down, this crypto thing. I'm just paraphrasing in broad strokes here. They'll talk it down all day in public, but in private, they will sell you their crap, their treasuries all day long. Even if you're a crypto business.
No, it's
So think about
interesting,
that.
right? Yeah, yeah.
Yeah.
It's and this is the kind of thinking you need to start implying when you're getting into this and seeing all this negativity on the mainstream media. I think this is really, really interesting. These stable coins are going to have an issue essentially with the U.S. government, and they're going to try to have to figure out how that works. But what I see happening here is I see a mutually beneficial existence, as opposed to we're going to completely kill your business. But that being said, you still have to be careful with this stuff. And the point that Ted and I wanted to get across today, and this is just a high level overview of stablecoins, is that's what they are. That's what people use them for. Be careful with them in the same way you'd be careful with any other cryptos that you own. Imply best practices with stablecoins too. You have a tendency to kind of look at the dollar and be willy-nilly with it, I guess is the best way to say it. Like, they're just dollars. Well, it's the same thing as holding, any other crypto. You need to be mindful that you're not leaving a lot of stable coins on an exchange, or, leaving it in a place where, somebody else could get access to it, because it operates the same way.
And the simple solution is just get a cold wallet of some kind. Get some sort of cold storage that you have control. Like, you have control over this. You're not relying on the exchange. You're not relying on the people, their process, their product, their policy. You're not relying on any of their security practices. You're not relying on anyone else. And whether take this mind job of people becoming sovereign and holding their own keys out of the equation. Get a cold wallet or ask someone that you trust to help you with this. Almost every day of the year, it's May, almost every day of the year, someone reaches out and asks a question, which I'm really grateful for. How do I do this? How do I protect, and the gist is, how do I protect myself from people stealing my stuff? And it's the answer is simple. And you'd be surprised how interested people are in this and how willing they are to try something new. So I just want to encourage people to think about the cold storage thing and understand that it's not scary. And everybody uses no regular person can. I can barely explain how email works. And you ask them, do you use email? Do you like it? Do you trust it? Yeah. Well, how does it work? I don't know. Doesn't stop them from using it.
Well, and as time progresses with this, you'll find custody solutions for this, right? That will be simple. I mean, there could be a world that we live in the near future where you're able to hold your USDC or Tether on, your E-Trade account, just as you would with cash. And so,
Yes.
the other thing people use this for is, look, if you're worried about your bank and you don't want to take the volatility risk in crypto, you might move some of it out of the banking system into a stablecoin. Now, that's an area where the government says, hold on, and the banks say, wait a second here, like this is not what we like. But despite all that, people will still make that decision because it's a better product. But the important thing to remember is there is risk in holding these stable coins. Don't let the name stable confuse you, right? These are experiments. They do have utility, Same practices with anything. I wouldn't take all of your dollars and go buy stable coins because you can move them around easier, right? Now, we'll see what happens with these banks over time. You may not have a choice, but this is like you talked about earlier, Ted touched on earlier. If you live outside the U.S. system or you're unbanked and you want a place to store your dollars, and transact, these
There
these
you
are
go.
potentially good solutions. But again, I want to stress, you know, there are risks with stable coins. These aren't, but again, you could say the same thing with banks. So I
Yeah,
don't
there's
want to
risk.
go.
Yeah, sorry.
No,
That's a whole
I
nother
don't want to
rabbit
get.
hole.
Yeah, I don't want to go all the way down the rabbit hole, but just understand that some of these have failed, and when they fail, they depeg, they go to zero. You're out. Any money you have in stable coins that fail is gone. So it's the same concept if your bank goes bust, right? Like so, there are risks here, and you have to pay attention to them. But these things can be used as utility. There's ways you can earn yield on stable coins. There's a lot of different things you can do with them as you learn how all this works. But I think for today, that was a great introduction to what they are and why they might be useful. I find the idea that Tether is using, I think they made more money than BlackRock last quarter. And BlackRock's one of the biggest companies in the world. And so if they're using some of that to buy U.S. Treasuries when other countries are backing away from U.S. Treasuries, I think that the powers that me go, hold on a second, this is actually a good thing for us, right? And I don't know the extent that Tether's doing that. I just think it's an interesting idea. What I really like is that they're buying Bitcoin. There is also a risk there, in that if they encounter a problem, they might have to sell some of that Bitcoin to shore up their reserves. So always keep that in mind. There's risk in everything. We lost Ted. Let me see if I can bring him back on real quick. I don't know where he went. But, okay, well, we lost him. Today was a quick one anyway. We'll just wrap it up there today. Hope this was helpful in understanding what stable coins are. As always, nothing Ted or I say is financial advice. We are not financial advisors, accountants, attorneys. Do your own research before you opt into this. If you opt into anything in the crypto world,